What are you seeing in terms of more people coming to your site and signing on right now?
Well, we've almost reached 9 million accounts. And what happened last week was Wednesday to Thursday, we saw a doubling of accounts, and then we saw another doubling of accounts. So this is new user accounts. So we're seeing a lot of people coming in. Obviously, they're coming in because of what's happening out there. Acorns does not offer trading. We offer diversified portfolios of thousands of stocks and bonds. And what we try to encourage people to do is not to think short, but to think long and to own part of the entire American economy, rather the whole American economy, rather than thinking about, just having a fragment.
Yeah, so just to be clear, you are not in competition with the online brokerages like the Robinhoods of the world, but in many ways, the retail frenzy we're seeing has been a tide that's lifted all boats. I am curious, though, what the millennial situation is. I mean, we've known that after the Great Recession, millennials were skittish to get into the market and basically we're not invested in the way previous generations were. Are we sort of hitting a tipping point now where that is changing? And if so, is the fact that we are seeing the air coming out of the GameStop shares, for example, right now a real risk?
Yeah, well, I mean, over 60% of our customers are first-time investors, which is great. The thing that I'm afraid of with what's happening right now is people are thinking a lot about trading, right? And trading short term and this kind of frenzied activity. And that's getting sort of heightened by all of the news media coverage. And this is a little bit like what happened when the pandemic hit and the market crashed and everyone was saying the world's coming to an end, get out. A lot of people got out. And the thing is, that's exactly when you should stick with it and stay patient. And right now, what I hope the message becomes, and I hope people come to understand, is diversification. Put your money in a basket of ETFs, which is one of the things Acorns obviously offers, and just let it sit there and be patient. If you want to play with 10% or less of your money and take risky bets and invest in individual equities or trade or buy options, whatever it is you want to do, that's fine. But the 90% plus of your money that is going to help you really build a future, you want to put that into a diversified portfolio. And I just really want to get that message out there more than anything, just because I want people to know it. I mean, obviously, we benefit from people coming to Acorns, but that's really secondary for me, frankly.
Yeah. I am curious, though, because part of what I guess has led to this moment that we're in the market right now has been those direct stimulus checks to people. Have you been a beneficiary as well? Have you been seeing people put that money to work at Acorns?
We have over the last 10 months when these things happen. We've seen increased contributions, which is great. I mean, since you can only contribute to diversified portfolios at Acorns, that's a great thing. And we actually did see in 2020 a higher retention rate than we saw in the past, which means people were sticking with it, which I hope means that the education we were providing for people and the messaging we were providing about the fact that sticking with it, staying patient, don't pull your money out when the market dips, stay the course. And by the way, that applies to diversified portfolios, right? Not necessarily individual stocks. So I think that messaging came across, and I am glad that we did see people putting their stimulus checks to work in terms of putting their money into diversified portfolios.
Shepard Smith here. Thanks for watching CNBC on YouTube.